Greetings dear viewers. In this video, we'll learn about cost concepts. First, we should understand what is the meaning of cost. The term cost means expenditure incurred in the production of a commodity. It is the total amount of money spent on the production of the commodity. So simply it implies cost is the expenditure incurred in the production. What are all the expenses we are doing for our production or for our business, or the total amount of spent on the production of our goods and services for our production for our business, that is called as cost. There are many kinds of cost. First one is money cost or explicit cost. Prices for the factors of production, payment and charges made by the entrepreneur to the various productive factors, wages to labor, prices to raw material, fuel, rent to buildings, interest to loan, taxes, etc. These are called money cost or explicit cost. Then implicit cost means wages for the work performed by an entrepreneur, interest on capital supplied by him, rent on land or building, profit in business are considered as implicit cost. That is, most probably the entrepreneur won't take salary for his efforts. He won't take rent for his own building. Those things are called as implicit cost. Then next one is real cost, that is the trouble, sacrifices, pains, efforts, different kinds of labor, or the real cost. That is, all these things have economic value, money value, but we are not considering that. So this is coming under real cost. Then opportunity cost or alternative cost. The word itself will explain us the sacrifice of alternative product that could have been produced. The opportunity cost of any good is the next best alternative that is sacrificed. The opportunity cost related to the possibility of substitutes of alternatives in the assortment of goods and services produced. Next one is past cost or future cost. Past cost are the cost which have been actually incurred in the past and find entry in the accounts book. For example, purchase of various plants, machineries, equipments like that. Then future cost are those costs which are likely to be incurred in the future period. Future costs are useful for cost control, pricing, projection of future profit, then introduction of new products, capital budgeting, etc. So these are coming under future cost. Next one is out of pocket cost or book cost. Out of pocket cost denotes immediate current payment, that we call it as petty cash and small payments items. So immediate current payments, and book cost need not be immediately made. For example, depreciation that will be in the books but we won't pay immediately. The next one is incremental and sunk cost. Incremental cost are additional cost incurred due to change in the level of nature of activity. Then shutdown and abandonment cost. Shutdown cost are the event of suspension of the plant operation. That is the cost of constructing sheds for sheltering plants, equipments and storing and exposed property. Then abandonment costs are occurred when abandoning the plant from service, that is disposing. For that also we are spending money. Then replacement cost and historical cost. Historical cost are originally paid in order to acquire an asset. Replacement cost are the cost of the assets which are computed at the current prices. Then private cost and social cost. Private cost are the cost of producing a commodity by an individual producer. Then social cost incurred by the society in producing commodities and services. Generally, the expenses for banking system, road and transport, bus facilities, public transport system, those are coming under social cost. Government is spending for us, and all the others, all the businessmen and also the general public are using that. Then short run and long run cost. Short run costs are accumulated in a real time throughout the production process. Example, employee wages. Those things are we are spending for only 1 month or 1 week, like that. Sometimes the wages will be given for 1 week or monthly, like that. So employee wages, cost of raw materials are coming under short run cost. Then long run costs are accumulated when times change, production level over times in response to accepted economic profit or losses. The land, labor, capital, goods vary to reach the long run cost of producing a goods or services. The next one is fixed cost or variable cost. Fixed costs are incurred independent of the quality of goods or services produced, such as building and machinery. Variable cost changes according to the quantity of a good or service being produced. For example, raw material cost, fuel cost, and so on. The next one is total cost. Total cost is the total economic cost of production. That is overall cost of production. It consists of variable cost plus fixed cost. So that the formula for TC, total cost, is equal to TVC plus TFC. Then marginal cost. Marginal means additional 1 unit. So the increase in cost that accompanies a unit increase in output. Additional cost associated with producing one more unit of output. That is called as marginal cost. The next one is average cost. We all know what is average. Average cost is equal to the total cost divided by the number of units produced. That is called as average cost. So this is all about the meaning of cost and the kinds of costs. Thank you.